Welcome to Making Money. This is Matt McCall. Thanks for joining me here today. It is February 24th. It is a Thursday, and we get some big news. Putin did what we didn't want him to do. He invaded Ukraine last night, and it's continuing today. That is weighing heavily on the markets, as you can imagine. The Dow futures were down over 800 points at one point. We've opened lower, and we'll see how we go throughout the day. It's going to be a wild day ahead of us, I'll tell you that. The VIX is spiking. Going to talk about that. Going to talk about some green hydrogen, blue hydrogen, a very interesting sector that really, regardless of what happens over there, is going to continue moving forward. And then a couple stocks that have gotten beaten up with really good earnings as of late and could be great opportunities. All this and more coming up right now on Making Money. Again, it's Matt McCall. Thanks for joining me here. Today's Thursday, February 24th, 2022. So Putin wasn't too kind to me last night. It is my birthday today, and he decides to invade Ukraine, and I wanted to have a nice day at the beach, maybe, get out and have some nice lunch. But I'm going to be working because the market's crazy today, and I need to keep an eye on what's going on. And even to add insult to injury, my grandfather's Ukrainian, or was Ukrainian, and going after part of the motherland. So bombs were flying, all kinds of reports coming out, potentially going after Kiev, trying to overtake the capital. I mean, there's all kinds of rumors right now, but that rumor mill, that uncertainty has led to obviously stocks pulling back. And we'll take a look here in 1 second at the S&P 500 and what it's doing. And this is early on. We're about 20 minutes in trading day here this morning. It's around 9:49. And as you can see in the chart here, the S&P is down about 1.7%. So it doesn't sound like that much when you look at it percentage-wise, but you look at where it's at. We're hitting the lowest level now that we've seen going all the way back to May. So, obviously there's a bit of a breakdown. From the intraday high of early January to the low that we saw here this morning, it's about 14%. And if you look at corrections, that's kind of in the wheelhouse of where a correction is. It depends on the studies you look at, but usually the average correction is around 13.5 to 17 or so percent, depending on the time frame that you look at. So we're kind of right in that wheelhouse. Again, we're 20 minutes in a day. We're at the high of the session at 1.6%. We were down over 2% at one point. But again, a lot of stuff's going to happen throughout the day, and it's something to keep an eye on. And obviously, I'll keep a very close eye on it for you. Let's take a look at the NASDAQ here, the QQQs. This is NASDAQ 100. Again, if you take a look at this chart, well off the lows of the day. But again, I'm putting out there only 20 minutes into the day. There's a lot of time left, folks. But only down 1.2% right now, all things considered. And if you take from the high here in November, the intraday high in the Qs, which is the NASDAQ 100, not the NASDAQ Composite, NASDAQ 100, to the low that we saw this morning, it's over 20%. That's a bear market, that pullback that we've seen right there. So again, it's something we need to keep an eye on. You can see down here the volume has been picking up on the downside, obviously with all the rumors all around Ukraine, Russia. But, a lot of this is all priced in because of Ukraine and Russia. Now, let's go over to the 10-year yields, and this is important to take a look at as well. So the yield on a 10-year is now down to 1.889, so let's call it 1.89. And, it was just above 2 not too long ago, so it's dropped quite a bit. It's down about 4%, that yield, just since yesterday. So people are rushing into bonds is what that tells you. Because keep in mind, fixed income yields have an inverse relationship to the underlying bonds. So as bond prices go up, the yields go down. So when you see the yields down this much, it means people are buying into bonds, buying into this safety, locking in what they believe to be a safer investment right now versus equities or anything else that might be out there. But you're safer than cash, whatever it might be. Nothing probably safer than cash right now. But so you're seeing that movement into bonds, and that's telling as well. And the other thing to consider here when looking at yields is, keep in mind the Fed meets March 15th, 16th. You'll hear the decision on the 16th of interest rates. The odds were actually above 50% not too long ago that they were going to raise interest rates 50 basis points, 0.5%. I never thought that was going to happen. I said that a couple of weeks ago. I think 25 basis points, 0.25% increase from the range now, which is 0 to 0.25. So basically, let's call them 0. So the range would then be 0.25 to 0.5. I think that's what we'll see. But, with what's going on in Ukraine, you don't know where it goes. I mean, Putin's a wild card, to put it nicely, and you don't know what his decision is next. I've said for many, many years that I believe that he wants the old USSR back, an old KGB guy. It's what he wants. So if he takes Ukraine, well, hopefully he does not take over Ukraine, then what's next? Belarus, and you start moving over to Lithuania, Latvia, and Estonia, and you start moving and taking all these old pieces of the USSR. And I don't think NATO or anybody in the West is going to allow that to happen. But again, there's that uncertainty, that risk. The odds are very low, but there is a risk. And because there is a risk, in times like this, humans tend to overreact, and we focus on the outcome that likely won't happen. And we do that in the market, we do that with health, we do it with family and relationships. We tend to think in times of high emotion, that fight or flight, and you tend to think about the worst case scenario. And that, to me, is the worst case scenario. I don't think the likelihood is very high at all. I think this will hopefully end sooner rather than later. But if Putin says to himself, listen, I'm not stopping until I get Ukraine and I put a pro-Russia government in charge there, I don't know. I don't know how long this lasts. But again, you look back in history, I'm a student of history, especially when it comes to the stock market. I believe we will get past this as well. I just don't know the time frame, and the uncertainty obviously is something that is tough to really stomach, if you will, especially watching your portfolio go down. So let's take a look at another chart here. This is the VIX, the CBOE volatility index, measures fear. And you can see here it spiked this morning, and it's the highest level that we've seen besides the one spike that we had in January. And then you go all the way back here to the January of the prior year, or 2021. So you can see in this chart that it is somewhat of an unprecedented area. I'm going to zoom out to show you just how much so. When you take away the pandemic, that's kind of an outlier. So let's just take that away. We really don't have many. This is going back several years. You have a couple spikes here. That one went for a day, but then we had in the 30s, again, for a day or two, above 50. But for the most part, anything into the mid to high 30s tends to be a bit of a level that, they say when the VIX is high, it's time to buy. When the VIX is low, it's time to go. And that's obviously an old funny adage in Wall Street, but a lot of times the contrarian view does work when it comes to that. So, with the VIX, it is showing great fear. I haven't seen CNN's fear and greed index, which sometimes I just laugh at it, but it is true sometimes. Like when you see it extremes, it tells you something. I spoke to my father this morning. He called me to wish me my birthday, and he's like, I'm not watching the news, freaking out, which most people don't want to watch it because it's just negative. And I'm good with that. Don't watch it because it's just going to ruin your day. Go play golf or whatever he was doing. Then he said, well, I talked to my financial guy now that I'm obviously out of business that takes care of his retirement, and said, move more into fixed income. And I had to explain to him that as interest rates go up, which they will over the next couple of years, your bond funds, your bond ETFs will actually lose value. You're better off going into something else. And it's just that. But he's a bit, and I'm sure he's not watching this, but he's a bit of my contrarian. When he said buy some Bitcoin, it was near the top. When he wouldn't buy some Bitcoin, I just said, and I talked him out of it because I don't think he can handle the ups and downs. And there's been years in the past where he's freaked out and it's really near low. But he's indicative of that average person that is an educated person, but not on the stock market necessarily, and they let their emotions take control of their long-term financial decisions. And that never bodes well. It might look like you might look like a genius for the next week or month or 6 months, but long term, it's probably not the best time to be freaking out. And I've always said that, folks, and I always will say it. And people will ask me, well, how do you just keep saying it, keep doing it? Well, I'm not looking at a year. I'm looking at literally decades and decades of history. And I've been in the market personally for over 2 decades. And I've seen several bear markets, several great bull markets, tons of recessions, 9/11, a pandemic. I mean, crazy shit. And it affects the market very similarly every time because we're humans and we trade and we invest with emotion. We suddenly become these traders. So when I say this stuff to hold on, I'm not saying it's just every day, like hold on. And the bears obviously are taking their bow now, saying I told you so. But the thing is with the bears, folks, here's a long-term chart of the S&P 500. The bears, and this is only going back to 2015. I've known bears that have been bearish for literally decades. But you're fighting this. You're fighting this uptrend. Same thing with the pandemic. You thought it was going to end the world. You thought the issues at the end of 2018, which led to a 2-day bear market and snap back. When these times happen, you have to be able to take advantage of it. Any extremely wealthy person that built their own money, that wasn't handed down from family. Wilbur Ross is a great example. He used to come on the show on Fox Business all the time, and he's very friendly. I loved him. He's a very nice guy, but he was an opportunist. I remember him talking when Greece was falling apart and it was going to end the EU, which it did not, and ended up being a great buying opportunity for Greek banks and Greek equities at that time, even Greek bonds, everything. So he was investing in Greek banks at a time when everybody was getting out of Greek banks, and I don't know how it paid off exactly for him, but I have to imagine it did very, very well. But the people that have made money, and I'm not talking about being happy, I'm talking about people just trying to make money, be opportunistic. There's only so many opportunities that come in front of you throughout your lifetime. And to me, in tech stocks, this is one of those opportunities right here, because you're not always going to have this type of opportunity to buy beaten down stocks at such an attractive level. And again, if I pull up here the Qs, we're now down 1.16% at the high today. I mean, I was going to buy this morning, but I was too damn busy doing other things preparing for this that I didn't have a chance. But I was going to buy in the open, but I did not. And I wish I would have. And again, we could be much lower a week from now. I don't know, but when I sense this fear, I could smell it. It's time that you have to. You can't run the other way. You can't run away from it, I guess is what I'm trying to say. All right, so that's the markets here. I just wanted to talk about that a little bit. We're in correction territory. Like I said, the Qs, if you go from intraday high to intraday low, in bear market territory this morning. But I want to talk about this, a sector that, people may be like, I don't want to hear about sectors right now, but we still have to think big picture. And a sector I've been looking at, and it's a very niche sector a lot recently, is green hydrogen, and sometimes it's called blue hydrogen. So the one method they use, they use electrolysis, and with an electric current, they split water into oxygen and hydrogen. And then if the electricity used to make this process happen, it comes from solar, wind, some type of green energy. It's called green hydrogen because it's being the process, the electrolysis with the electric current is done by green energy. So it's net zero. Okay. There's also blue hydrogen, and that refers to the hydrogen is produced using natural gas. So obviously that's going to emit some toxins. So what they do is these emissions, the CO2 emissions, not toxic CO2 emissions that are generated in the process, they're captured and stored. So that's called blue hydrogen. Green hydrogen is really the way that the industry is going right now. And Societe Generale, they believe by 2030, they'll have total investment globally of $500 billion. Goldman came out and they believe that the market in the next 20 or 30 years from now, 25 years, will be worth over $1 trillion per year. And it's worth about $125 billion today. And that would equate to about 15% of the global energy market if it gets to that level. Many believe this will take place of natural gas, whether it be blue hydrogen, natural gas turning into it, capturing it, or it's completely green hydrogen. And what's nice about this, the green hydrogen, it can be used for a very diverse range of different industries. Transportation, really heavy industry, heating, you could use it for all kinds of different applications. It could be used in most sectors, really, as an energy replacement. So it's something that there's a lot of smart people have been talking about. There's a lot of money, as I mentioned, going into it, and a lot more money is planning on going into it. The European Commission, they have plans to install 40 gigawatts of renewable hydrogen electrolyzer capacity in the EU by the year 2030. I look at this as just such a huge opportunity, and a lot of people say that it's really going to be used in industrial sectors, heavy transportation, so big trucks, that type of stuff, which I could very well see that. And of course, China is leading the charge on this again. They're leading charge on a lot of things, but they believe that they'll get green hydrogen, the cost of that below blue hydrogen, which is the version where you use natural gas and you capture the emissions, by 2023. So by next year, Brazil and India think they could do it by 2024, 2025, respectively. So you're seeing some, and these are obviously big countries, China, Brazil, India. And you're going to need a lot of hydrogen for that to happen, and a lot of infrastructure plays along the way. And you could look at this from an investment standpoint. You can look at like a pure play electrolyzer company or these big conglomerates that already have exposure to hydrogen. Societe Generale in the report that I read this week, they also noted that the assets under management of hydrogen-related ETFs, went from zero to more than 600 million since the beginning of 2021. So a lot of money's investments coming into it as well. How do you play this? That's the big picture. So I've been trying to figure out how I can play it, how I can do it for my subscribers, and looking for different ideas. And none of these are buy and sell recommendations. I have any exposure to them, as you know. Nothing here is do your own research. These are just ideas, education, put on your watch list. Remember, 3 things we always want to achieve. We want to educate you. We want you to have fun. We want you to make money. The third one's been a little rough lately. I won't lie to you, but hopefully we get that to turn around here soon. So one that we can take a look at is Plug Power. And this has been around a while. And you can see the chart here. It's pretty erratic and ugly, if not, might be one way to put this chart. And let me zoom out here. I was going to show you a little bit more of this. Look at Plug Power going all the way back. This was a stock that was like $1, ran up to 75, back down. There was a big push up there in 2020, and it's since come back. And at this point, you look at Plug Power, and it's pretty much a pure play in the industry. There's not many pure plays. They have 5 green hydrogen plants in the U.S. That they're running right now. It's not a huge company by market size, but it's a company that, to me, it's going to be aggressive because it is more of a pure play on this. I mean, it's about $11.1 billion company. And if we take a look at the financials, we'll see actually in 2020, no revenue, nothing, so, and then the year before that, 230 million. But this year we're looking for about 500 million. That was 2020. So 2021, when numbers come out, they're not yet, looking for 500 million. 2022, looking for about over 900 million. And then by next year, over 1.4 billion. So you are seeing, it really work its way up and it's starting to turn because you're starting to see green hydrogen really take on. That being said, it's still expected to lose money through 2023, turns first profit in 2024. So it does have a path to profitability, but it's not cheap because even on a price to sales forward price to sales ratio, it's still trading at about 7.9 times sales. Yeah, granted, you put that against some software companies, it's half of it, and it does have good growth. It has a path to profitability, but again, it's a little more risky than a software company. It's more of a solid business. So again, put it on the watch list, but keep in mind it is definitely a bit of an aggressive play. Another one is Honeywell, which this is the conglomerate play, but they are a leader in carbon neutral aviation fuel. And a lot of people believe that there is a future when it comes to planes running on hydrogen and commercial airlines. And that obviously, if you think about the emissions into the atmosphere, a lot comes from jets that run on fossil fuels. So there's a lot of different studies going on right now for sustainable fuel, air fuel, SAF, and hydrogen could be something that's along that line, or they could have some type of fuel that's not as harmful to the atmosphere. Again, very early stages of both of these, but again, it's something to keep an eye on. Honeywell is a big, major conglomerate. So if you're buying a Honeywell, it's more than just this. This is a small player on it. But look how it's rolled over. It was about $240, nearly down to $175 here today. But again, if you zoom out, and this is what you have to look at, if you're looking at just at 2015, stocks down less than 100, you're still up 75, 80%. Again, there's not many places in the world you can do that. And you're not doing that right now in fixed income or bonds. You're not doing it in cash, obviously. I just don't understand. Like, people give up on a stock market when we have pullbacks, when these are the times you should actually be looking for opportunity. Another way to look at it is Alstom. It's a maker of trains, hydrogen trains. And you may have heard of it. Sometimes you can look on trains if you're on a train ever, and it's a huge maker of it, based in Europe. So it's getting hit. Stocks down 7.8% today to a new yearly low. When you look at the chart, it's pretty ugly when it comes to it. But if you zoom out again, long term, oops, a little too far there. If you zoom out long term, you can see it's had a nice run up, pulled back. But again, no recommendations here. I'm just sharing players that are in this area that you may want to keep an eye on. Toyota's in there because they have the woven city that they're building. This is like their city of the future, and they're considering using hydrogen energy to power the entire city. And actually, yesterday was a 1-year anniversary of the woven city, and you can see there's a time lapse of the last year how they're building it. Once it's done, I'm going there. I'm going to do a full deep dive on it. It's really neat. It's just Google Woven, Woven City. It's so neat. Once we get closer to completion, I'm going to take the team over and do some videos over there because I think that's really neat what they're doing, Toyota. They also have a planned 2025 release of a hydrogen-fueled combustible engine vehicle. So they're working towards that. They're also working on solid state, as I've talked about many times in the past. So Toyota is always on the cutting edge to see what works. They kind of throw a lot of stuff on the wall and see what sticks, and they'll go with it. Air Liquide, and this is an interesting play. This is another European company. It's an industrial gas company. They believe that they're going to triple the hydrogen-related revenues between now and 2035, up to $7 billion. Again, trades like an ADR here, just as like Alstom does. Much better looking chart. You see it's held up actually pretty well, even though it's down 3.5% today. I actually like Air Liquide. This is a company I do like, and kind of take this part out over here. We can see it's had a nice run. I used to have some back in the day for clients when I had a money management firm. I do like this company. I think this is a nice way to play a lot of different trends, to be honest with you. And then there's NEE, which is NextEra Energy. It's the world's largest utility, and they're really investing quite a bit into green energy as well. Again, they're real big into solar energy as well. This stock's actually up a couple pennies today. So you look at something that could potentially diversify a portfolio if you think it's going to be rocky. It's utilities. And if you zoom out a little bit, I'll show you here. We're kind of really near an important support level. You see, this was a big resistance before the pandemic. We kind of got stuck around it again, pulled back to it, pulled back to it, pulled back to it, and pulled back again. So that 70 level to me is very attractive for NextEra Energy as a potential long-term buy. It's a play on a lot of different clean energies, and that's what I like about it. Two stocks I want to share with you. And these are kind of, I wanted to share more, but this market's crazy. I'm going to try to keep the show shorter and get back to work here. But two stocks I want to share. One is SBNY. These are my birthday presents to you. I like to give. So on my birthday, I like to give. This is Signature Bank. This is a bank that is a major player in cryptos. It's one of the crypto banks, if you will, that's kind of leading the charge. And I still believe in cryptos, regardless of the pullback that we see. We saw Bitcoin at 35,000 on this mess that's going on. This is down 5% today, Signature Bank. And it's down because interest rates fall. As interest rates fall, it lowers the potential margins for smaller banks, especially one like a Signature Bank. So SBNY is a symbol. That's one I definitely put on your watch list. And the other one is carparts.com, very small company. PRTS is the symbol. And it's not the greatest looking chart in the world, but you look at where it was and how it ran up and it's pulled back. I believe if you think about it, I've been trying to buy a car, and this is actually up 1% today. Strangely enough, I didn't plan this one being up either. I thought everything would be down. It's very difficult to get a new car right now. I'm looking for one, and they're pricey. Number one. Number two, used cars are nearly impossible to get, and the prices are literally stupid. I'd rather Uber and save my money. So I believe you'll see a lot of people looking towards carparts.com because that's the type of business, in my opinion, that will do well in this time because people are going to hold on to their cars a bit longer. It's a $380 million company, but what I find fascinating about it is in 2020, it did sales of $443 million. So it trades less than one-time sales. This year, looking to grow to 579, up to over 800 million in sales by 2023. And there's a kicker, folks. It's going to hopefully turn profitable in 2024, that path to profitability, which is really important. So again, very small company, but it's one that you think about it, it's not a buy and hold forever, but this is one that you could potentially, for a couple of years, do well based on valuation, number one, based on a path to profitability, based on the fact that people are going to be keeping their cars longer, so they need more parts for it. So one thing to take into consideration. Those are just two I wanted to share with you that are on my watch list right now that I wanted to share. I was going to talk about some other stocks being hit, but I don't think it's worth it right now. I think I'm better to get back to work and analyzing this market. But let's take a look here at the S&P 500 one more time, down about 1.59%. Near the highs of the session. We'll see if we hold up. A lot can happen between now and the time this video goes out, to be honest with you, which stinks sometimes. But the Qs are down 1.2%. So again, holding up pretty well near the highs of the day. Hopefully it continues. This is one of those days where I will be honest with you. We could end up down 2.5% to 3%. If something crazy happens, we could also go back into green and have a great capitulation buying opportunity. I don't know. We'll play it by ear. And again, I'm not trying to pick bottoms or anything like that. I want to watch this though. And you can see right now that the NASDAQ just popped right now. We're only down less than 1%. It's crazy. We're going to see a lot of movement. Don't get sucked up into it too much. Maybe it's time to walk away, go to the beach, play golf, go for a hike, whatever it might be, go see your grandkids, and stay away for a couple days. Tomorrow's Friday, the weekend. Let me worry about it on my birthday. I don't want to be doing this right now, but I'll keep an eye on everything for you and keep you up to date of what's going on. And if anything crazy happens, I'll do a quick video on Friday as well before I go off for my birthday golf. All right, everybody, thank you so much for watching. Again, stay strong. Prayers to everybody that's in conflict over there. Hopefully everything works out well and humanity comes out on top. Thank you so much for watching. That was Making Money, and I'm Matt McCall.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.